What are the top 5 millionaire investing habits that you can implement into your life, use at a young age, and be able to implement to achieve financial freedom for you, your family, and your future? In today's video, we are going to be talking about the top 5 millionaire investing habits that you can use to one day become a millionaire and achieve financial freedom. Again, it's very imperative that you start at a young age, and we're going to be talking about the eighth wonder of the world, compound interest. Before we dive into this video, please make sure to show some love. Make sure to like down below and subscribe to our YouTube channel if you've not done so already. And leave me a comment down below. Do you agree? Do you disagree with some of these methods? Let's dive into this video right now. Now, the first thing I want to talk about is what compound interest is. Compound interest is very simple. In simplistic terms, it's pretty much your money growing on your money over time. Now, again, the average S&P 500 yields anywhere between 8 to 12% on a given year. And over time, that's going to compound. You can also use dividends to help you with compound interest and many other methodologies that we have addressed on this channel. Now, again, number one, you need to invest ASAP. I talk about this all the time here at Brotherhood Finance. We're really trying to help you achieve financial freedom and help you learn to earn, keep, and then multiply your money so you can invest your money into an asset vehicle. One of those being the equities market or the stock market. So again, number one is you need to invest ASAP. Now, what I'm showing you right here on the slideshow is a monthly contribution of $100 over a length of 45 years at the bare minimum average S&P 500 yield, which is 8%, and this is starting at the age of 20. Now, if you started at 20 and you waited until you were 45 years old and you waited those 45 years, you would have $500,000 and $37,000. So why do you need to get started dramatically and fast? The reason I state that is because, as we've talked about, time can be your best asset or your worst asset. You actually have a very great advantage, and the longer you wait, the more money you will be missing out on. If you invest $100 a month, that's only $1,200 a year. You times that by the 45 years. It's not really going to equate to a lot of money, but if you look at this chart right here over time, you're going to see that your money will continue to grow and continue to compound over time. Now, let's say you wait 5 years. You're going, I'm 20 years old. I don't need to wait. I'll wait till I'm 25 till I get a job. This is why I preach so heavy. Start now. You shouldn't be going out buying, luxurious things right now. You should be investing, really learning, increasing your financial IQ and your financial education. So again, put that savings to work. Average CPI, consumer price index, is about 7.8% right now, and it's increasing, the highest in 40 years that we have addressed on this channel. You are secretly getting robbed by inflation. Again, what is inflation? Inflation is when they print more money. When we came off the gold standard in 1971 from President Nixon, we weren't following the gold standard. Why does that matter? It matters because now the government is able to print and make more money, which currently then devalues your dollar. So you need to invest. This right here shows, again, you only have $361,000 if you only put $100 in a month, but you wait 5 years. That's why you need to start rapidly and right now. Again, number one is you need to invest ASAP. Now, the next thing we are going to be addressing is number two, and that is don't time the market. It's very hard to time the market. We've addressed this from other YouTubers. We've showed different slides. You can't really time the market. As they like to say, it's better to have time in the market than trying to time the market, as it's almost impossible to accomplish. Now, let's go into some data and some statistics. So they did a poll and they did, some data, and the results were stunning. Only 1 in 5 people who tried day trading, which is pretty much, trading every day, not being a long-term investor, not utilizing, a Roth and some of those benefits that we have addressed, which is, quite frankly, the easiest way to become a millionaire. If you've not checked out that video, make sure to do so. These day traders didn't even break even, and 50% of the traders lost more than 36% of their invested capital. Again, only 1 in 5 people who tried day trading even broke even. These stats and statistics are astonishing. That's why it's, you shouldn't try to time the market. You should have time in the market and use time as your best asset. Even if we were to go into a recession, there's a lot of recession fears based on increased rates, the price of oil. Actually, another statistic is the last time oil was this high was back in 2007, right before the Great Recession, and we had that mini housing housing collapse. So there's a lot of uncertainty, a lot of economical factors that are, in the play right now to keep in mind. But with that being said, it's, still don't try to time the market. If you just dollar cost average into the market, buy at different prices and buy over time, we showed how, you can easily become a millionaire over time. Next thing I want to talk about is historically, lump sum investing outperforms dollar cost averaging 71% of the time. And the average amount of overperformance is precisely correlated to the length of time the investors on the sidelines in the stock market. That's why I said you need to start ASAP. You need to get in, get involved, really learn, really master your craft. We talked about that, when you're an employee and when you're young, go out, get some skills, get some experience. It's the same principles that are going to be applied when you're investing in the equities and or stock market. So keep that in mind. Again, these people that have, put in lump sums, so a larger amount of money instead of trying to dollar cost average, have actually, outperformed 71% of the time. So that's also something to keep in mind. Number three we're going to be talking about is understanding the investments itself. Now here at Brotherhood Finance, we talk about single equities and single stocks that I prefer. Again, it's not financial advice, it's financial education. We've gone over the price to earnings ratio, which is important to look at, the PE ratios. We've gone over cash on hand or liquidity, that's important to look at. Their revenues, what is their year over year growth, what kind of company it is. So if you want to get more information about that, check out some of our stock investing videos. But you really need to understand, what are you buying? And quite frankly, you should be spending some time, not just taking other people's judgment or advice. You need to spend some own time, really master your craft, really get in the market. Do you want to invest in tech? Do you want to invest in, the consumers market, and something like that? So, these are things to keep in mind. You need to understand your investments overall, and you need to, have a passion for what you're investing in and understand it to a high degree and level of aptitude. Number 4 goes right back to the first thing we were pretty much saying. You don't want to invest in the short term. You want to invest in the long term. Based off, some of the things we have shown and all that stuff, there's been multiple periods that have just shown it's not good to try to time the market, and it's not good to get in and get out. Get in, get out. Make a decision, be, straight and direct on that decision. It's very easy when the markets are going up to say, yeah, I'm never going to sell. But when you see your portfolio go down, you're down thousands of dollars, you need to keep in mind that really you should probably be doing the opposite of what you're going to do, which is sell. You should probably be buying when others, are selling. And again, that's why Warren Buffett says be greedy when others are fearful and fearful when others are greedy. So that's important to keep in mind also. Again, be in it for the long term, not the short term. We're young, we have time. That is one of your best assets as a teenager or as an early adult in your 20s or even your 30s and in your 40s for that method as well. You have more time than you think you do. Think ahead. Set up a 401k through your employer. Set up a Roth IRA and max it out $6,000. They limit these principles and these methods of investing because they know that you're getting those tax advantages that we have talked about already before. Now, if you look at this chart right here, it's showing the analyzed total returns over a span of time. 1 year period, the 3-year period, 10-year period. In 10 years, you're at least going to get a 20.1% ROI, return on your investment. 5 years, 28.6, etc. So, these are some data and information to keep in mind. Now, number 5 I want to talk about, the 5th one, is you need to invest consistently. So don't just invest one time, go to college, never invest again. If you can, if you have, earned income, again, as we know, earned income is the highest taxed. That's why, eventually you want to try to accumulate and generate passive income. And you can do that by investing in equities, in real estate, and other investment asset vehicles as well. So number 5 is you need to invest consistently. Every single month, every single year, whatever you're comfortable with, just keep doing it, whether that be in a Roth IRA, whether that be in an individual account. And by the way, again, we have some of those links down below. If you have any questions, leave those in the comments if you want to get started. Again, it can be your best asset or worst. The choice is up to yours. So, keep that in mind. Invest consistently over time. Now, if you look right here, investing over 30 years. Invest, $10,000 a day, invest it for 30 years, and 8% average return rate for this chart right here would give you about $100,000. So, that's something, important to keep in mind. Investing over 30 years, invest $200 a month, and you invest for those 30 years, you'll actually be at $317,000. So that just shows you how important it is to consistently invest over a long period of time. That way, you're able to achieve financial freedom. And again, use these 5 millionaire investing habits. These people that have, made riches and been able to provide their families and themselves, really, at Brotherhood Finance. Our main goal is financial freedom. We want you to have freedom, so make sure you implement some of these methods. Now, right here, you can see, the monthly contributions broken in, cumulative returns from 2000 to 2012 was a 24.2% increase, or ROI. So your investment grew 24.2% with dividends. Now, again, if you have not checked out our dividend investing video, how to make passive income in a crash, I really highly recommend you check that out and check out some dividend companies, because over time, those are going to pay you on a monthly basis or on a quarterly basis. There's 4 quarters in equities, and that's when they're going to be paying you those distributions from dividends. So if you've not checked out that video yet, please make sure you do that. Again, look at that substantial increase. You go from 24.2% to 42.3%. So those are pretty drastic differences, almost a 2x if you invest in dividend yield companies. And again, the dividends are even more of a compound growth if you're young. And you can use compound interest at a young age. So again, brothers, I hope you found value in this video. Make sure to implement these methodologies that we have mentioned. If you have not checked out our other content, please make sure to do so. And if you don't have Pi cryptocurrency, you're really missing out. You should probably check that out. That was developed by Stanford PhDs. It's the 8th largest cryptocurrency that's not listed. If you really like crypto, I really recommend you check that video out. It could be a hidden gem. So check that out on our channel also. If you've watched this far, I appreciate you watching. Have a good rest of your day. Have a good rest of your weekend. And make sure you smash that thumbs up button. Smashing is very important in life. Subscribe if you've not already done so. I appreciate it. Cop some Brotherhood Finance merch. Peace, brothers.